Good morning, Lafarga Chamber. I want to say, I've been coming to this chamber for a while, been to a couple other chambers, and I really want to give a thank you to Jason and everyone in the leadership for the Lafarga Chamber. There's a lot of work that goes into the chamber meetings behind the scenes that we don't know about, and you guys do an excellent job. So thank you for having me here today. Really appreciate it, and I really enjoy being a part of this chamber. Thank you. So, we're going to talk about everyone's favorite topic today, mortgages, right? Yeah. Remember that fun process. Should have you out of here today by 12:30, no later, April Fool's. So really the goal today is just to talk about some of the basics of mortgage and what we do. We help our community. My name is Adam Lafarga with Prosper Financial Mortgage. We do the loans that our community needs. I'm a mortgage broker. So the difference between mortgage broker and your traditional bankers is we do a lot of what's called the non-QM loans, or what I'd like to think of as the business owner loans. Speaking of the Chamber of Commerce here, we do the non-traditional loans for our clients. A couple of things that you hear in today's market right now. Is it a good time to buy? What are the interest rates doing? Am I going to be okay with my mortgage payment? How often is it going to change, right? So one of the things we like to do in our consultations with our clients is show them a graph here of the recessions that have taken place. So is real estate a safe bet? Over these darker blue lines, those are all the recessions that we've had recently. And this white line is what shows what's happened to housing prices. With the exception of a quick little blip back in 2008, whoops, housing prices have all continued to go up, right? So buying a home is a safe investment for your clients. Favorite discussion, mortgage rates, what they've done traditionally, how high they've been in the past, and where they are for a national average. I think it is interesting that I see a lot of social media videos that say, hey, if you take the long-term view, interest rates really aren't that bad. But it's all about affordability and monthly payments. So a 7% rate on a conventional loan still hurts. And our number one goal is to help find affordable options for people, multiple options when they're buying. We always advise our clients to save for a down payment. When it comes to saving for a down payment, believe it or not, the most important thing is setting a budget. Setting a budget when you're looking to purchase. A lot of times, most homeowners don't, or most first-time buyers don't know, they don't need 20% down to buy a home. You can buy a home with as little as 3.5% to 5% down, depending on the program. A huge indicator of what type of mortgage you're going to get and your interest rate will be your credit score. So of the three factors, your credit score is something to keep in mind. So many little mishaps for credit, one late payment, not realizing something accidentally was on your report, can really affect your overall affordability when it comes to buying a home. And for your average homeowner, you're going to look at a couple different options. Which home loan is right for you? Of course, we do the traditional, conventional, VA, FHA loans, and even the occasional USDA loans. But today, because you are business owners, we are in the business owner community, I really want to focus on the non-QM loans. So these are our bank statement loans. These are loans that are great for people who have a lot of deposits. Oftentimes we see this with restaurants, construction companies. We also work with profit and loss loans. You may not have as many deposits, but as long as you've been in business for at least 2 years, work with your accountant, you can get a letter for them to help you qualify. And then one of my favorite loans right now, the no income loan. No questions asked. You have 30% down, make it happen, right? So this is great for non-foreign nationals, people who won the lottery, large inheritances, people who necessarily don't want to show or file any taxes. These are the great thing about all three of these programs is they don't use your taxes to qualify. We're going to look at alternative forms of qualifying for your loan, which works great for business owners because we love to pay all of our taxes, right? Everyone pays everything. And then what we're seeing right now in the market is a lot of DSCR loans. Think of this as the investor loan. You put 20% down, and as long as the property cash flows, you're going to be able to buy an investment property 2 to 4 units. This is important because as business owners, we work so hard. You got to make sure you're investing into your future. And we always love investing in real estate.
What debt service coverage do you look for at the ESR?
As long as it's even. It can be even. I always like to have a little room for cash flow just in case somebody's a little more optimistic on their rents than something, but as long as it's breaking even, it's covered. And again, my name is Adam with Prosper Financial Mortgage. Again, I really appreciate being part of this chamber. If you have any questions, or does anyone have any questions? Time on the market has gone up compared to last year. Last year we were probably looking at around 30-something days on market, meaning that the house gets a sign in the yard, sometimes it's expected to go in escrow about 30-something days. Right now we're about 47 to 52 days on market, and it all has to do with just affordability. The good news and bad news. Houses will never be cheaper than they are right now. Fingers crossed, right? But as soon as the rates come down to 5%, we're expecting to see a lot more of the move-up buyers come back into the market, sell their first home to buy the next home, right? So right now we have an inventory challenge. There's not a lot of homes on the market, especially for this time during spring. So the houses that are on the market are sitting a little longer. The buyers are just a little more hesitant. It's really hard to say, hey, here's a $6,000 mortgage payment. What do you think? So what we're doing is coming up with the alternative options. If you aren't or know of anyone, it's going to be some rate buy downs, maybe a 2-1 buy down, buying the rate down temporarily, or even a permanent buy down. So in the future, I do think we will see the rates come down. I don't think we'll see affordability improve. What's that? Typically now. Like springtime, houses that are listed between I think March and April. Like this is the typical time people are trying to move. When the kids are out of school, they're trying to secure something. Being that homes are taking a little longer to sell days on market, I think we'll probably see the typical buying season extend a little later into the summer. But like right now, it's usually the best time. If you're looking for a deal, the wintertime is the best time to buy, right? That's going to be the people who really have to sell or need to sell. Maybe they're relocating or maybe inherited a property.
So what do you see is going to lower the interest rate? What's going to happen?
Inflation. Once we get inflation under control, we'll see rates come down. So right now, the rates they've been very volatile. And the reason is a lot of uncertainty with tariffs. We don't know what's going to happen. I mean, tomorrow, I think we'll get a better idea of what happens with the global tariff situation. Either the rates are going to improve or it's a rough ride. But either one or the other, I think the market is going to price out that uncertainty. So best case scenario, rates are going to improve as we come out. In the short term, I think we'll probably see rates stay a little higher, and then once you get some better job report numbers, inflation numbers, then we'll see it start to come down. The Fed is expecting, I think, 2 cuts this year, so we're not expecting any significant change in where the rates are going to be for this year. Which this Friday we get the job reports numbers, so that'll be a big indicator of where we are for the rate. No. I say if you can, do it, because when the rates do come down, you're going to be in a very competitive market. Because there's just not enough inventory. And that inventory, when you're in a very competitive market, you end up paying more for the house anyway. So, in a funny sense, it makes sense to buy sooner and then just refinance later than it does to start competing for a house or with multiple different buyers. But right now, there's less competition. So if you were looking, I'd say it's a good time.
Sorry.
question was, how does the recession impact housing? Typically, it's good for us. Interest rates come down. That's what the Fed will use to fight recessions, right? They lower the interest rate. So on the real estate side, it's good for us, not necessarily good for everybody else.
How is all of the vacant property, they're building multi-unit buildings, how's that going to affect the housing?
Depends, right? So if you're buying a house that has an ADU and you put in multiple generations of family in there, that does help with the housing. With these vacant properties, you're getting more people into a concentrated area, you're not necessarily creating more homeowners. So if you have anyone who's going to think about buying, and a lot of for first-time buyers, they're moving out east, right? They're going towards Riverside, San Bernardino. They're buying this new construction, and the reason is it's just affordability. They see that they could buy a condo, 800 square feet here in La Mirada, La Habra area, or they can get a 4-bedroom house, 2,000 square feet in Riverside. So those two things are going to affect it. I think that the more units we build on top of each other here with the vacant property is going to be good for whoever owns the property, but it's not always good for those people renting there. But at the end of the day, we do need that housing too.
All right, thank you so much.
Thank you.